Okay, Rafael Davis back with my man Stephen Darling here on the Real Man of Real Estate. Continuing the conversation, we've covered a lot of ground. So if you're just tuning in, man, we've given out a lot of valuable, what I consider to be valuable information, and we was able to pick my partner's brain here, Stephen, who's been in this business for 20 plus years, working both sides of the fence. I personally stepped away for a little while, actually to do martial arts. So I focus on the private money side. My nickname is the Hard Money Black Belt. But now that hard money, I like to put at the end of that to beat because we have a lot of financing options that's very, very hard to beat anywhere out there. So we were just finishing up the last segment with VA. Is there anything else you need to say about that VA part, Steve?
In regards to, well, just kind of understanding and looking into the purchase side of things. Right now, super competitive market, right? The average in North San Diego County is $65,000 above asking price, coming out of pocket, not just offering it and making a contingency, but people are paying anywhere from $60,000 to $90,000 out of pocket extra on top of their down payment to get into properties, and we know that it's hard to swallow. So, I myself have done over 1,000 real estate transactions. I know the contract in and out, and so one of the tools that I've gained there, and to be completely humble as possible, is I've got the experience. I've done it 1,000 times and a few thousand loans. So if you're working with a realtor or you're a realtor and you're listening, we have the tools, the ideas, the specifics, getting creative to help you get your offer accepted. There's a lot of different ways, and there's a lot of different realtors out there that are getting creative, that are intelligent and doing a great job. But there are a few things that unless you are a lender, that you're going to know. And there's things that we can advise on and help you structure and put together and understand when writing your offer so that you get it accepted and maybe not have to come out of pocket $1 jillion to get that property, because eventually the market will come down. It will always go back up. You buy for 800, say it goes down to 600, and then in 5 years it's at $1 million. You will always gain equity, always. It just takes time. Real estate is the number one investment in the world. Just give it its time.
Right.
So in regards to purchasing real estate in Southern California, if you're a realtor or you're looking to get into the market for the first time, sell, get into the market for the second time, whatever that case may be, we have some very unique negotiating tools that we are available and readily accessible to contact and to help you guys get your offer accepted, because we know how extremely frustrating it could be writing 5, 6, 20 offers and not getting that property that you love, that you want your husband to have, you want your wife to have, you got a new kid coming, or you've got kids that you want to get in a certain school district, whatever that case may be. We've got the tools to help you and possibly give you some strategic advice that might help you get that property that otherwise might not have been able to get.
Right, absolutely. And when it comes to negotiating, those things matter. Writing a good offer matters. And hearing that coming from lenders, because we know the real estate doesn't take place without the money, or some refer to it as without the debt. You don't really have anything. So to have someone that can negotiate for you and help you, and also let me point out to the realtors, guys, just because we also do real estate, we typically do that for family and friends. You never have to worry about us ever doing anything to your clients or wanting to take your clients. A realtor in confidence shared that with me. He said, Rafael, you talk really well. I know you do private money. I know you do conventional lending. He said, but, there are people, and this is kind of how he told it to me. He said, there are people who worry that, if they're not doing something right, maybe that you would just, take the client. And I'm saying, man, first and foremost, we operate with extreme integrity. And like I mentioned before, like Steve mentioned before earlier in the segment, we're both family men, and that's not how we operate. So that's something you never, ever have to worry about whether you've signed a contract with them or not, because we want your repeat business. We want you to always bring us business. Whenever something comes up, whether you're an investor, a first-time home buyer, a FHA buyer, if you're looking for things real estate, we want you to think about Rafael Davis and Stephen Darling of D&D Capital, your Darling Lender, and Darling Homes and Estates. We cover everything for you. One thing I wanted to back up, I don't want to back up. I want to touch on the San Diego market real quick, because you were saying how everything is going up and how everything went up. I was just recently looking at the numbers that came out from the month of March, and detached properties, that's a property that's not, a condo attached to anything, they rose by 20+%. Attached properties rose to 20+%. I think the median home price right now in San Diego County for a detached property is like $975,000. I believe that's the median price, and for for like a condos or attached properties, it's like $624,000 or something like that. And I remember earlier when you mentioned how the property had rose. If you remember, Steve, actually my partner here, was my realtor when I bought a home back in 2012. We shopped around. You remember that? We shopped around. We went looking. We saw a couple. My wife liked some of them she didn't like. And we got a smoking hot deal. I think I bought it for about $300,000,
Yep.
and that property just recently appraised for $755,000.
That's right.
Yeah, and less than what's that? A decade?
Yep.
About a decade. So that's another good thing about being here in Southern California. Real quick, because I know time is going. One thing that was mentioned to me recently, and that was a family member of mine actually. Was concerned whether or not they can buy a property or qualify for a loan because they had student loan debt, And I explained to them that that's not going to stop you. Can you touch on that for
student loans? Are actually, man, it's a huge topic. It's a uniquely crazy topic because there's so many changes that have occurred with student loans. Mm-hmm. They used to be able to write them off in bankruptcies, can no longer write them off in bankruptcies. There's student loans, when it comes to loan financing or mortgage, to be more specific, underwriters are not going to pass over it just because you have a deferment or a forbearance or a written agreement that says you don't have to pay for it for another 2 years until you graduate or whatever. They have to include something in the calculation. When it comes to Freddie Mac, it's usually 0.5%. When it comes to Fannie Mae, it's usually 1%. And usually, if you've got about $100,000 in debt of student loans, that is $1,000 a month payment for Fannie Mae. It's $500 a month payment for Freddie Mac. That hits your debt to income ratio very hard. So if you call each company or, Nell Loans or whichever student loan company it is, and you set up a repayment plan for $20 a month, $50 a month, something very low that may not even come into effect for another 2 years, that is what is going to get incurred into your debt to income ratio, and that is what the underwriter is going to look at to approve you. That is very important. So you always want to make sure when thinking about buying or refinancing that you set up a very low repayment plan with your student loans, and that'll help you be able to accomplish and achieve what it is that you're trying to accomplish or achieve when it comes to refinancing or purchasing. You don't want that student loan debt to get in the way, but it definitely will not stop you from refinancing or buying a property.
Excellent. So many people, that's like one of those myths that are out there. They think, oh, well, I can never qualify for a home. I have student loan debt, right? Or I've seen it on the other side when people want to refi. Well, I don't think I'm going to qualify for a refi because I have student loan debt. And what I'm finding and what I'm seeing, which we've also saw together, a lot of people put them in long time deferments, right? Because they're not paying on them at all, right? But they still have to be taken into account. It's no way to get around them. You have to address them. I've kind of seen the same thing happen a little bit with people that are owing the IRS, right? If you owe the IRS, that does not automatically disqualify you or stop you from qualifying or, making a home loan purchase. All you have to do is just make sure you have it set up with them, work out something with the IRS, have like a payment plan, right? And then you can proceed and you can move forward.
We need one statement from that. You set up $100, say you owe 10 grand to the IRS.
Right.
$100 a month payment plan, it comes in the mail, and you show the underwriter that. Now that's only $100 getting held against you in your debt to income ratio, instead of having to try to figure out a way to pay $10,000 to IRS to buy a house or to refinance. Now you can accomplish what you're trying to do. That IRS debt is not going to hold you back from doing that, for that exact point that Rafael just stated. Is you set up a payment plan and you're going to be good to go.
Right, there it is. Everything changes. You set up that payment plan and then you're good to go. So basically what I'm saying with that is, reach out to a professional. You can definitely reach out to us, yourdarlinglender.com, dndcapital.biz. Reach out to us and we will show you exactly what you need to do. Basically, don't let anything stop you, guys. Like we're in a great time. We're in a great position. Right now in this country, I know there's a lot of things going on. We're coming back from the pandemic. My heart goes out to everyone who lost loved ones and in the pandemic. And I know people are still dealing with the COVID pandemic and things like that. But, I shouldn't say but, because that negates it. We're still getting through this and we're moving forward, as a country, as individuals, as companies. We're doing everything that it takes and we're making it happen. So I'm going to take one more quick break here from the Real Man of Real Estate. We'll come back. I'll tell you how to get in touch with Stephen and myself and what needs to be done. I know I mentioned we were going to get into private money, but what we'll probably do is, just tune in for that next show and we'll get deeper inside of that realm. So we'll be back right after this quick commercial break.